if you ask, like, you're a friend of so and so, or you're so and so's cousin, like, don't talk to anybody, like all that kind of stuff. That's not how I run my company. I don't operate in buildings like that. I only operate in buildings where we're allowed to operate in, because I've dealt with the headache of even when we were in the right, having to fight the association. Right. Doing that from the other side of the coin, where you're in the wrong and you're trying to protect your company from being able to get shut down, I would never do that.
This is episode number 78 of the Short-Term Rental Success Stories podcast. Are you an investor that's looking to have your home professionally managed? Go to cohostit.com for more information. Welcome back to Short-Term Rental Success Stories. I'm your host, Julian Sage. This is a show where I talk to hosts about their journeys in starting and growing their short-term rental business. My goal is that you'll be able to walk away with practical information that'll help you become a better host and learn how to scale your business. Like any exceptional host, we all strive for 5-star reviews, so please go on over to iTunes and let us know what you enjoy, as it really helps support the show. If you haven't done so already, go on over to our Facebook group, The Host Nation, to connect with the community. Hey, what is going on, Host Nation? I'm super excited to be back again with you this week. So first off, I wanted to apologize for last week not releasing the expected episode. We've gone 77 weeks and episodes now of being on time, so I feel really guilty for being a week late on this episode, but I do also want to be honest with you guys. It is a challenge to be able to find really amazing and awesome guests, not because that there aren't amazing people, it's just that this is a very small niche of an industry, so being able to find these people really is a challenge. I do have a person that works full-time with us, and their just job is to be able to find qualified people that can provide value to the show. You know, we do have to get really resourceful with how we are trying to find these people. It takes a lot of work and a lot of follow-up, and we don't always have people, sometimes we just have people lined up like the day before an episode. So sometimes that does happen. We do like to be ahead of it, but that is not always the case, especially right now with everything that is ongoing. There's been a lot of people that have dropped out of the space. Some people are just kind of keeping to themselves. So it has been a bit more challenging during this time, but I do apologize, and we are working to, just get an episode out every week. Some things in the future may have to change. We may have to just go to every other week, just because we are, being a weekly interview podcast, and there's just, again, not being a lot of short-term rental operators in the space that we do feel really qualified to be on the show. We might have to go to a bi-weekly episode, and we do have the other podcast, Vacation Rental Machine, and that one is a lot more easier on us because we can just release an episode every week. It's John and I, and we're talking about a lot of the topics and questions that you guys still have, so we might be making some slight modifications to the show. But please, if you are interested in coming onto the show, send an email, let us know, and we would love to be able to have you fill out a questionnaire and see if you'd be a good fit. And for those of you that are listening to this, we do have a live workshop coming up this Saturday and Sunday. So that's going to be September 26th and 27th. This is going to be a 2-day live workshop, which we're calling the Stress-Free Hosting Workshop. This is a really cool workshop because it's going to take everything that we see, some of the biggest stress points, some of the big pain points that we see a lot of new hosts making and experienced hosts. And we're going to be working, this is a workshop, so you're going to be working with John and I. We're going to be helping you guys with whatever it is. So we have some really cool workshops. I don't want to spoil too much, but if there's things in your business that you're looking for assistance with, we're going to be doing some workshops on like listing optimization. We're going to be doing workshops on market research. We have some really cool special guests. One that I'm really excited about is we're actually going to be having a scaling workshop. So, working with a sales trainer that is actually going to be coming in and helping you. You're really personalized in your business so you can help scale your business if that is. So whether you are just starting off or you are an experienced host looking to scale your business, this stress-free hosting workshop is going to be, again, this is a live training. You can definitely get the recording and find so much value. But if you want to attend live, if you want to get your questions answered, now is the time. Again, that's going to be September 26th and 27th. You can go to shorttermsage.com/stress-free. Again, that's shorttermsage.com/stress-free to get your tickets, or you can also pick up the recordings of that workshop and still benefit from that as well. Today, I had the honor of speaking with Darik Eaton, founder of Seattle Oasis Vacations, a management company that operates 30 units in the Seattle, Washington area. Darik's portfolio currently consists of 28 managed and 2 master lease properties. In this episode, Darik shares his journey of starting his short-term rental business using Craigslist, his battle and the eventual outcome of fighting a condo association on their regulations, how he grew his portfolio inside of the same condos and HOAs that he was also fighting against, and how he helped stop the city of Seattle from enforcing even stricter regulations, because Seattle does have some strict regulations in place. We've also covered a lot more in this conversation. Of course, if you like my show notes for this episode, go to shorttermsage.com/STR78. Or if you like my show notes sent directly to your inbox every week, then go to shorttermsage.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Host Nation, to another episode of Short-Term Rental Success Stories. In this episode, I have the special honor of speaking with Darik Eaton. Darik, would you please introduce yourself to the Host Nation and let them know who you are and what inspired you to get into short-term rentals?
Yeah, sure. Darik Eaton. I've been managing short-term rentals for 13 years. Started with my condo in downtown Seattle. I lived 30 minutes to an hour and a half, depending on traffic patterns, south of the city. And well, at the time, girlfriend, soon to be wife, and I decided that we wanted to have a place in the city to escape to. We're foodies. We wanted to go to the theater, go do all that kind of stuff. So we bought it, and the idea being that if we rented it out at least 50% of the time, it would pay for itself, and then we can enjoy it the rest of the time. Instead, that very first year, I booked like 315 nights. So we didn't get to stay there much, but I justified it as, well, we can either take this $1,000 reservation, and if we want, we can pay for a limo to bring us back to our house in the city or in the suburbs. So it didn't make financial sense for us to say no to the reservations, and okay, we can Uber or cab or take a limo and be in a better financial position. So let's just do that instead. So yeah,
that's funny. We sometimes, like, when you purchase a vacation rental, it's like you realize, man, if I stay in the property, I could be losing out all of this money. So it's like you get it because you want to use it, but then at the same time, it's just like, man, well, this thing is doing pretty well. What was it like when you first listed that first property online? I mean, back 13 years ago, Airbnb was, I mean, they came out in around 2007, 2008, but that probably wasn't the first platform that you were marketing it on, correct?
Yeah, Airbnb. As far as I know, I don't think Airbnb expanded to Washington or anywhere outside of San Francisco until 2010. I did join it in 2010, but I was initially very first reservations were actually using Craigslist, which I realize now is kind of a joke. But I interviewed a property manager in my market because we both had full-time jobs. We weren't really looking to have another job of managing a vacation rental. And I asked them in the interview, well, do you use Craigslist? And they said, oh no, Craigslist is nothing but scams. And I had taken some pictures myself of the property. I hadn't even gotten professional photos yet or anything like that. And so just using those, I created a simple Craigslist ad and put it up, and I booked 22 nights in February in Seattle, and this professional manager expected me to get 8 nights for the month. And I did that within a first week, and I was like, okay, well, I guess I don't need that property manager and I can do better on my own. And so then I parlayed that money into listing on VRBO, which at the time you just had to spend, I think it was $16 more to buy one more picture than the last person. And then that got you to be the number one listing in the market. So I did that. And at that time, I think I had to buy like 9 photos to be the number one in the market. And then the person that was number one, like we went up until 16 photos or whatever it was at the time, that the max that you could have. So I had the number one listing in Seattle on VRBO, so that helped our success. And then eventually I listed on Airbnb when it came around, and about, like I said, I think that was about January, February 2010 when we joined that platform.
So you purchased this condo, you were looking for a property manager, you realized, man, I can I could just list it on Craigslist and do so much better. What was I mean, what was your mindset or your life like during that time? Were you thinking like, hey, this is going to be, something that's profitable? And how much was it able to cash flow during that time?
So the property paid for itself and my house in the suburbs. So,
Wow.
and that was just a one bedroom, one bath condo.
Wow. And did you realize like, hey, did you know what to expect getting into this, or what was your mindset of like, running a short-term rental, during this time?
So I did some good research on the front end. We had good friends of ours that owned in the building, so I was able to look at their their performance, and so I knew, like I said, that if I at least booked 50% of the nights, that it would be break even, which is really all that I was shooting to do because I did intend to stay there, but then quickly had a hard time justifying saying no to reservations, especially as I got more aggressive in rates. I mean, that was some of the things that I learned. Obviously, when I booked those nights in February so quickly, I was probably underpriced on the market. But I got to, I learned those lessons and over time kept on increasing my rates. And after lots of 5-star reviews, we're able to, get that same property that I was booking it, maybe $100 a night that first February. I think my record for that property in peak season may have been $320 a night for this one bedroom, one bath condo. So
How did you know, during that time? Like right now, there's a lot of pricing tools out there and a lot of research that you can do when you are trying to compare prices. But you were using Craigslist. Airbnb wasn't around. There's probably a handful of people on Verbo. But how did you know, like, what to price the property, how to increase the price when there wasn't that much information available?
I have, and I used then, and I still use today. More pacing is really what I use. So I I knew that if I sell out too soon, that's a signal, the market signal telling me that I was underpriced. And the Seattle market was kind of special at that time in that there weren't that many. There were some, but there weren't that many vacation rentals. I mean, at one time, um, I'd say this must have been like 2011, 2012. I started managing for someone else a two bedroom, two bath condo. At that time, I remember doing research, and there was 5 two-bedroom, two-bath condos in all of downtown Seattle. And so when people would talk to me and want to try and negotiate on rate, I'd say, "Well, this is one of you want two-bedroom, two baths. I have one of 5. The other 4 are booked. So you can book one of our cheaper two-bedroom, one baths, or you can pay what I'm asking." And most of the time, close the deal. So
So you were able to set the prices. So you weren't doing anything like looking at like hotels or anything. You were just using what pacing to basically say like if there's more people that are inquiring and booking during this time, maybe that means I can start to increase my prices. Kind of what your thought process was.
yeah, and trying to improve my pacing, I guess, is the best way to put it every year. Because I mean, people booked. The trends are totally different now than where they were in 2008, as far as how far in advance people book. Um, now I think my average initially may have been like 75 nights, was my booking window in Seattle. Now we're down to like under 30 as far as average, especially now in the current pandemic scenario. I get probably 25% of our bookings within a week of
Is that
arrival. So
is that just because of the amount of supply, or is that the mentality of how people are traveling? You think?
I think it's how people are traveling, just the uncertainty and just making last minute decisions. Maybe people getting fed up with what's going on. They're like, I need to just get out of the house. I've had several local bookings that, typically would be possible red flags as far as last minute local bookings. But, talking to them, they were, from another neighborhood, just tired of their family and needed to just get a couple nights to themselves. So they book a condo downtown to go get away. So
So you had this property, it was doing really, really well, and you're kind of winging it. You're doing the spacing. You realize like, hey, there's not a lot of other market out there for people that are trying to book these 2 bedrooms or these condos in downtown Seattle. What was your next step? Did you think like, hey, I need to pick up more of these, or you say, hey, this is doing well, I'm just going to kind of you know get some extra side income on the side? What was your thought process?
So about a year into it. So my mom actually bought a condo in the same building. Actually, I actually made an offer on that same property months earlier, and they because I did lowball it because going back. I mean, I purchased it in the fall of 2007. So that was the beginning of the end of that real estate cycle, and I knew that. And so I lowballed on a 2 bedroom 1 bath, and they didn't accept it. So then we bought our 1 bedroom 1 bath with the water view instead. Well, 6 months later, my mom made an offer for, I think it was $10,000 underneath what I offered, and they took it at that time. And so that was my first management situation. And she did that because my mom had owned vacation rentals in Palm Springs, but those were an appreciation play because at that time, appreciation rates in Palm Springs were going up at crazy 10-25% a year, stupid unstable numbers, which is what led to the crash eventually. But she wasn't really worried about cash flow because it was all appreciation play. Here I had a possible appreciation play and I was cash flowing, so that looked like a really good investment for her, so she bought one. So that was my first management client. And then not too long after that, the homeowners association tried to enforce a rule that they passed 10 years prior, but didn't receive sufficient votes to actually change the rule. But they said, well, because it's been more than a year and it's still on the books, you can't do anything about it. Well, a group of owners, because there were 15 of us that joined a lawsuit, sued the association, and we won. And part of that process, we got to sue for damages because we had to shut down for a period of time in order to comply. Um, so my numbers became part of the discovery, and I gained some clients from that. Let's just put it that way. People were impressed with how well we were doing, and that was when I picked up that first 2 bedroom 2 bath. Actually, was after that lawsuit, and I took that property. Their best year with their management company was $40,000 a year gross, and they netted $40,000 a year that first year. So that was
Wow.
so I brought it to like $80,000 or something like that. So
Okay. Definitely want to hit on a couple points there. The first is regulations. So you brought up you had to go through this process of suing the HOA. When you first got into short-term rentals, this first condo, were you looking at regulations or zoning? Was that even something that you were even considering, or did you just purchase it thinking like, hey, I'm gonna rent it out as a vacation rental, and I'll make some profit? What was your thought process?
so because I knew other owners in the building, I knew the rules of the building that allowed for it, and I even questioned about that specific amendment to the property manager. My mistake that I made is I didn't get it in writing. It was a verbal conversation. Actually, the property manager perjured themselves in the court case. I know that there's no way to prove it, but I know that the conversation happened. They claimed, oh no, we've never told anyone that vacation rentals were allowed in the building. It's like, so I wish I either recorded that call or had that in writing, but I didn't. I would have made the case that much cleaner and easier. So yeah, so I mean, I was aware um, of HOA rules and specifically seeked out a building that allowed for short-term rentals when I got involved. Um, but then, yeah, a few years later, then I got involved in the city fight, and a couple of years after that, I
Right.
had to deal with state level stuff. So I've kind of dealt with it on almost every level that
Yeah.
you could
So
do. I haven't had a county fight, I guess. So that's the only thing I haven't dealt with is the county level fight. But city, state, HOA.
Okay, so yeah, that was going to kind of be the next thing is so you found this condo association and you said like, hey, I want to make sure that I can do this. Were you looking at like the state statewide regulations or the county or city regulations for if this was going to be allowed, or were you just thinking, is this HOA, is this condo going to allow me to be able to short-term rent?
Yeah, so I did basic level research that both the city of Seattle and the state of Washington didn't have any legislation against short-term rentals. So that made it easy. Washington State in general has pretty good, I'd say, protections for land use and land rights. So I had that going for me, and it wasn't even on the radar of the city council. So that only became an issue once Airbnb made it an issue.
Right. And so what advice would you give to people that, because there's a lot of people that get into, HOAs or condos, and they, because, one, they're affordable, they're in, really nice locations, pretty easy to be able to manage. What advice would you give to people that are maybe in situations where they're renting out in a space or they're interested in renting out a condo?
Um, yeah, read the declaration, read the bylaws, read the house rules or condo rules. Those are the three documents that primarily will affect your ability to rent or not. But then on top of that, you could have state level condo or homeowner. That some states have two different designations, either condo law and then homeowner association law. Those can be two different things, or they can be under one umbrella. So that is kind of the overarching document that could provide us some protection. Normally, where that comes into play is that overall condo or HOA law could have writers that have to do with how they can change those rules after the fact. That could work in your favor, but that's a state by state type of thing. But yeah, I mean, whenever you're buying within a building that has the ability to basically change the rules and make your business harder to do on the maybe just the house rule level, to completely making it illegal, you better dot your I's and cross your T's, and more importantly, find out what it takes to change those rules, because that was the key point for why I was able to win the lawsuit. Was that in the specific building, it was listed as a permitted use to rent for any length of stay. That language was in the permitted use section, and in order to change a permitted use in Washington State, it takes 90% plus any and all people that it would affect in order to change that. So that wasn't the threshold that they met. They only reached the normal 67% when they tried to change it. So that line is what made it so that the amendment got thrown out by the judge.
So there wasn't anything like in the condo bylaws that said specifically like, hey, you're allowed to short-term rent, or hey, you're allowed to, list as a vacation rental. It was this wording that you said that permitted to rent out for
any length of stay.
Any length of stay. So is that what people should be looking for when they are interested in, purchasing a condo or short-term renting a condo?
That's one part. Yeah, for sure. Knowing what the minimum rental period is. What does it take to rent? Some condos say that you have to live in a property for 2 years before you're allowed to rent. There's all sorts of different variations. So to say that there's any one thing, that's oversimplifying. But that's a key component. Yes, to know what the minimum rental period is, because in downtown Seattle, there's only like 6 or 7 buildings that I've found to date, and I've read hundreds of condo docs that allow for rentals for less than 30 days. So the majority, in my case, are not able. I'm not able to operate in, but I do know the ones that I am, and then I proceed to go after properties in those buildings.
So when you say you're going after those properties, you're like going after the owners of the units and saying like, hey, would you like to short-term rent, or are these like owner occupied? Like what are you doing specifically?
Yeah, I mean, I do all sorts of different marketing efforts. So depending on the marketing piece, sometimes I'm sending a marketing piece to non-owner occupied, specifically within buildings. Other times it could be just a general flyer to the building, whether they live there or not. Marketing to the real estate agents that work within that building. Lots of different ways to try and pick up properties.
So what you're doing is you're identifying condos where there's already existing short-term rentals there, or not. There's nobody operating there, but you go through the bylaws and see if you're even allowed to. So you're basically turning condos that had no prior into short-term rental communities, essentially.
Both. Yeah, I've done both. So yeah, sometimes I'm the first person to figure it out. Sometimes I'm not. So, but that is one way to start the search. Is you can find properties via Airbnb, VRBO, other sites, and find, there's seems to be several in this building. That's a good way to go about your research, because maybe that means that they actually allow it, but that also isn't always the case. Sometimes people do it against the rules, or maybe they were allowed to because they got grandfathered in, and then the rules changed after that. So there's, just because someone else is doing it doesn't mean that you're going to be able to, but it's a good starting point.
What are the things? I mean, you're looking through all these bylaws. Um, I imagine that that maybe it's a little challenging to be able to find what it is that you're looking for. How do you know, like, okay, I should be allowed to be able to operate a short-term rental in this community if they have like these specific words or these specific phrases? Like, what are you looking for?
Yeah, I normally start with the leasing rules. That's the section that I look for. In Washington, it's a pretty cookie cutter document for whatever reason. Pretty much everybody uses the same. So I know that section 10.1 is normally the one that I start with. Not always, but oftentimes that's the leasing rules. So that's where I go to first, and if I don't find anything there, then I do read through the entire document, and then also the amendments, to make sure that I can skip over amendments that specifically have to do with, like, somebody selling their parking from one unit to another. Okay, I don't need to read that, but the I normally read through the entire document, then go to the bylaws if I can, and then yeah, reach out to the building and finding out directly from them. I did have a situation where an owner came to me, and it was in a building that I hadn't vetted yet. Um, Started the vetting process, looked at it, we reached out. It was a small HOA, and this is where knowing what it takes to change the rules is so important. Basically, the board members had sufficient votes to change the bylaws themselves, because it was such a small HOA. The 5 people on the board could draft an amendment and pass it on their own. And that's what they did. They made it short-term rentals illegal after we reached out to them. You know, yes, that's a shame, but at the same time, I would rather do that than get up and running and fully operational and then have them do this exact same thing just because they don't like it. At that point, I have a bunch of sunk costs that I'm never going to get back. So I'd much rather be on the front end of that.
Do you think that it's worth it to, some people that have gone through the situation where the HOAs change their, come after the homeowners, or they change their bylaws, or they attempt to change their bylaws, or maybe there's just angry other people in the condo that are trying to go after and ostracize the short-term rental hosts. Do you think it's worth it to go and operate in condos where maybe they don't have, maybe they have the rules there, but they don't believe that there should be? Like, how do you dance around like condos, because they are so, I feel like maybe they are a little flippant.
Yeah, so that's where I tend to go after larger complexes, because it's a lot harder for large complexes to change their rules. And the rules are the rules. Whether, if you're allowed to do it, you're allowed to do it. Someone could not like it, but they were able to read, well, the way I look at it, they were able to read the exact same rules that I am. They decided not to rent their property short term, but they had the same exact notice that either I did if I'm purchasing or my owners did when they were purchasing. So I don't necessarily feel bad for them. They should have, if they don't like it, there's plenty of other buildings, especially in my market of downtown Seattle. You have to be actually unlucky to accidentally buy in a building that allows short-term rentals, because there's not very many of them. The overwhelming majority, hundreds of condo developments that don't allow it. So, okay, you happen to be in one of the handful that allows it. So, sorry, not sorry, because who knows? Maybe their life may change, and they may want to hold on to the property and rent it out short term at some point down the future. I have converted some people that were supposedly my worst enemies, and some years go by, life scenarios change, and they end up calling me and say, hey, you know what, I want to either rent to you so that you can rent to rent, or I want for you to manage it for me. So
Why continue building this business? So, I mean, it sounded like, you ran into an issue, you had to sue the HOA. It was probably a big headache. And then you decided to, expand your business still within the HOA. Why continue doing that and reach out to others?
yeah, so part of that story was that when we shut down temporarily, and by shut down, we basically pivoted to doing 30, 60, 90-day stays, furnished rentals during the course of the lawsuit, so that we were complying, and then it would look the best in the eyes of the court, is what the legal advice that we had. So that's what we did. During that time, that's when I actually started lease arbitraging, and that was something that no one really even did yet, as far as I know. I mean, there's probably people out there, but it wasn't a thing like it is now. So we leased 3 apartments in a neighboring building, and the reason why was that I wasn't sure if I was going to be allowed to host the people that already booked in advance for summer ahead of time. So I leased these units knowing that worst case scenario, these people, I could put them there. It's not the same property, but at least I have a place for them to stay, because the way the Seattle market worked, if you didn't book by April for summer, you didn't have a place to stay. Like, Seattle sells out at that time. So I hedged that by leasing 3 properties. And then I was allowed to host those people in the properties they originally booked. So then I got to lease those, rent those properties out for the summer. And because I had pretty much the only places available, because they're brand new at that point, and I had a clear calendar, they did really well. And then a few months later, we won the court case, so that put that to rest. We got, like I said, we gained some clients from that. So, and this was all while this was still a side hustle for me. I still had my 9 to 5 job in corporate finance, and it wasn't until that business shut down, and it was pretty rough, because I was actually the landlord for the business, so I lost out on lost rent. Also, they had back rent that never got to see. It was a pretty tough scenario, and I was friends with them. Literally, my boss was one of my groomsmen at my wedding, months before all this went down, and so it took a couple days of kind of licking my wounds and thinking about it and realizing, wait, I mean, really, for the past 2 years, I was making more money doing short-term rentals. At that point, I had 13 properties in total between arbitrage, managed, owned. Um, I'm sitting on a business already. I just need to get serious about it. So go get software, get a website, hire some help, and build it into a full-fledged business.
So when you got those 3 leased properties, was that in another condo HOA?
That was actually an apartment building.
That was an apartment.
So yes,
Apartment.
I knew some of the investors in that building, so it was designed to be a condo building. But then they got their certificate of occupancy in November of 2008. No one had no one had money anymore to buy these condos. They pre-sold all of them. In fact, it was a record. It was in the Seattle Times because they sold like 250 units in 36 hours because they pre-sold them before they built in the peak in 2006. They build it, and then, oh wait, no one has any equity anymore in their properties. They can't actually buy these properties, and so then they turned into apartments. And so when that happened, some of the investors in the project I knew, I told they knew what I was doing with my condo. They were like, "Well, reach out to the owner, and maybe you can rent out." The first time they said no, but then they were struggling with lease up, and a few months later they reached out and said, "Hey, you still interested?" I'm like, "Yeah, I'd do that." And that worked out perfectly because then I had my hedge against being shut down in my property. So
Wow, very cool. This is like the origin story of the master lease. That's pretty cool. But yeah, so you have these 3 units. Your job is kind of fallen. Now you're relying on your short-term rental income. You just finished this HOA battle. Um and then is that when the city or the was it the state of Seattle, or was it the city of Seattle that came after short-term rentals?
that didn't happen for several years. So there was a couple years of quiet time, but that started up in May of 2016. The city
Okay.
of Seattle, and the sad but true part of it was really Airbnb. So Airbnb celebrated their bill that they got done in San Francisco that said that, okay, if it's your primary residence, you can rent it out for 30 days out of the year, and they thought that was the best bill ever. And the reason why is that it made it so that HomeAway, VRBO, and Booking.com didn't have any inventory. It was all about monopolization of inventory. So then they took that exact same cookie cutter bill and gave it to the mayor's office to pass. And so we went from a city with no regulation at all to looking down the barrel of legislation that would have put us all out of business
Wow.
overnight. So then came multiple years of work with the city and city council members to craft smart legislation that, because the argument was the same between San Francisco and Seattle, and that the argument was we were taking away affordable housing, which we weren't. But there were at the time less than 1% of all rental housing units in Seattle were short-term rentals. Less than 1%. How does 1% of something actually tip the tide for the entire market dynamics? It doesn't. It doesn't. And on top of that, I mean, my inventory started at like $400,000 for a studio up to $2 million condos. Those aren't affordable. So that if they were rented on the open market, they wouldn't be considered affordable housing. But that didn't really matter to the city because it really wasn't about that. It was really about the hotel lobby and their connections to the housing lobby, and them using their labor. So basically, hotel labor is what caused this bill to kind of get pushed out after Airbnb suggested it to the mayor.
So Airbnb was actually working with the hotels in order to get this passed, or it was the hotels were kind of already stirring the pot, and then Airbnb just kind of came in and
Yeah. So the way I don't know the timeline of who the chicken and the egg of who was first. It seems like Airbnb was first in that they got this bill, because I mean the wording was the exact same, so that it came from Airbnb. But then the hotel lobby got behind it too and said, "Yeah, the affordable housing. This is a problem. Like we got to deal with this. Our workers don't have affordable places to live. What are we going to do?" Um, so that was kind of so it is kind of a very weird scenario between Airbnb kind of being their own worst enemy and throwing hosts like myself that had been on the platform for years doing millions of dollars of annual revenue with Airbnb, and they were fine with throwing me under the bus in order to claim that the people that wanted to rent out spare rooms, that was really their market, when, you know, 20% of revenue maybe is from that type of rental activity.
Hey, this is Julian, and I wanted to be able to give you our newest book, Airbnb Secrets Revealed: How to Build a Fortune on Airbnb Without Owning Property. In this book, we talk about the concepts of rental arbitrage investing as well as co-hosting and how you can build a business leveraging other people's properties. This book is perfect for the new short-term rental investor, and it's something that I wish that I had when I first started, as it would have saved me a lot of trouble and helped me to understand how to be able to leverage the power of short-term rental investing in your own real estate portfolio. If you'd like to get our newest book completely for free, go to shorttermsage.com/free book. Now, back to the show. I want to go back, so you dealt with the HOA, you had these 3 lease units. There wasn't any regulation in Seattle. What was that time period from around, it was probably around 2010 to 2016. This is when you were full-time hosting. This is when you started Seattle Oasis Vacations.
Yeah, Seattle Oasis Vacation Rentals. Yeah. So 2012 is winter 2012 is when my previous company shut down. So that's when it became my full-time gig. Even though, to be honest, like managing 13 properties by yourself, I was putting a lot of time into it, but it was also making me the majority of my revenue too. So it was okay. So I spent a lot of nights and weekends dealing with stuff, and my wife was helping, with guest correspondence during the day, or I would hop on a couple times a day and do guest correspondence throughout my work day, whatever it took to kind of get things done. So it was 2012 where we got serious, got software, hired our first employee, and really focused on scaling the operation from there.
How did you start to scale your business during this time? Because, right now there's a lot of people that are interested in short-term rentals. So the mindset is definitely shifted as far as, investors, people looking at this as like a vehicle for, generating some nice cash flow. But what was it like for you to be able to grow your portfolio in a time where people maybe weren't thinking that? This was also right after the recession where there's a lot of people got burned. How are you able to grow when there, one, wasn't as much information, and 2, people were scared of what to do?
Well, I was a solution, so that was the key to it. So there was a lot of people that, they did buy, and they were underwater in their properties, and they didn't want to live there anymore because of life changes. I was able to provide enough revenue where they could keep affording their property. So that was one customer avatar. Other customer avatars were people that were okay in the financial crisis, and they looked at the fact that prices had slipped 25-30%, and I was able to provide 16% cap rate on purchases. They wanted to do that all day long, and so I went after the investors at that point that were just looking for vehicles to make money, connected with their real estate agents and with investors, and word of mouth gets around. If you're able to perform on that kind of level, people talk. And in fact, one of those clients that bought in 2012, she ended up selling one of her units because eventually the short-term rental law made it so that in Seattle, basically any individual or couple or corporation or partnership of any type can only own one vacation rental within the city of Seattle. So you can have your primary residence plus one full-time rental. So she ended up selling, because she had multiple, selling it to her accountant. So to me, that's a pretty strong recommendation about what I can do. If an accountant said, "Wow, I've been doing your taxes. This looks like a good investment. I'm going to buy this from you."
So you were doing the master lease model, and you picked up these. Why not continue acquiring multiple apartments, and why switch to more of a heavy, primarily management model?
So I've always done both, up until that law came into effect, as far as how many licenses an individual could have, because the way they tied that is on the ownership side. So hypothetically, yes, I could go to every building owner in the city of Seattle and get one unit, but I wasn't able to scale that with having 3, 4, 5, 6 units in one building. And that's been my kind of my secret sauce in that one of our properties, I mean, we manage up to 25 units in one condo complex. So all sorts of economies of scale come into effect when you're able to do that. And so when that law came into effect, I had to basically end most of my arbitrages except for ones where I had ones with individual owners, because then the individual owner gets the license, I can still operate it, and we just make an arrangement that way. So I've always done all the models. I mean, they each come with their pluses and their minuses. You have more control over arbitrage in some aspects. You don't have another person, another party in the mix. But when I set up my company, I always went after people that were investors, and because of that, most investors are great vacation rental clients, because I hear from them at tax time, and that's basically it. As long as I'm producing and keep on bringing them revenue month after month, they don't care.
So most of your clients for your vacation rentals are investors?
Yeah, overwhelming majority. I mean, we have some that, yeah, they bought the property to live in part time or whatever the case might be. But I'd say the overwhelming majority, 75% are more the investor type of clients.
But with the regulations that did pass in Seattle, they only one investor could have one other property. So basically, you'd need 28 or however many investors for every single property.
Yeah, exactly. You need one each property needs to have one, and they even went so far so that a married couple could only have one. If you're a minority partner on an LLC that owns one, that's your one license. You can't have another. So they tried to cover any reasonable loopholes that one might expect. Like, oh, I'll just buy one in an LLC. No, it doesn't work that way. So other than maybe potentially buying something and putting like your kid's name or something like that, that's about the only option that you have.
How are you finding these people, or how are they finding you?
Well, finding me through having a good web presence, that helps. And I primarily reach out to the real estate community. I use that as the top end of my funnel. I provide value to them, and that I provide performance, for what the properties that they're listing could make, and then the word gets out that way. Like I said, I've done direct mail. I've done all sorts of different ways, and then being a good operator is almost the best advertising. So in the kind of buildings that I operate in, the concierge desk, the building managers, if someone comes to them and says, "I want to have a vacation rental, who should I talk to?" They send them to me. So that works out in my favor.
So you're actually setting up these relationships with the associations, and they have a good rapport with you.
Yeah, I wouldn't say that I'm setting up relationships. Like, I don't have any, like, there's no referrals or anything like that. It's just more from the standpoint being a good operator, being present, vetting guests well, not having problem units and problem guests. That's the best marketing that one could have.
I mean, should the condo really know who you are and your name, like that, or is it better to just be a little bit more discreet and not have the association really kind of hear from you more frequently? Like, how do you interact with them that they would even refer you business?
So in pretty much all the buildings we operate in, part of those HOA rules require us to do in-person check-ins. So myself or a team member is meeting the guests every time that they check in and give them a brief building tour. So we're around. We're not running. We don't have lock boxes, hanging out and people secretly checking in or any of that stuff. And I know that goes on. I've stayed in places like that. In fact, I stayed in a place like that in Toronto when I had my first conference call to deal with the short-term rental legislation stuff coming up in Seattle. In the keys, it specifically said if you ask like you're a friend of so and so or you're so and so's cousin, like don't talk to anybody, like all that kind of stuff.
Wow.
That's not how I run my company. I don't operate in buildings like that. I only operate in buildings where we're allowed to operate in, because I've dealt with the headache of even when we were in the right, having to fight the association.
Right.
Doing that from the other side of the coin, where you're in the wrong and you're trying to protect your company from being able to get shut down, I would never do that.
And what is that conversation or that like? Because you said you've had to deal with associations where you're in the right. You made sure to fact check, but now they want to maybe change, or they don't like people are complaining, or that someone wants to start a coup. How do you um, you know go around that without it becoming a big debacle?
I mean, there's always, so in the building that I sued and won in, there's still people that hate my guts. There's nothing I can do about that. But as every year goes on, one of them sells, one of them dies, time goes on. Eventually, and there'll probably be new people in the building that don't like it. But I go back to the fact that they got to read the exact same condo docs that my owners got to read. They bought in a building that allows for the rentals. It's very public knowledge now. It isn't like there's only one or two. There's maybe 40 in a building of 240 units. It's not underground. It's not that, oh, your neighbors to the only vacation rental in the building. They're out there. So, do your due diligence when you're buying a condo. And I guess that goes for both sides. If any listeners want to be in a building where they don't want to have vacation rentals as a neighbor, do your due diligence. Make sure that it's not allowed. Or if you want to invest in it, then great. Do your due diligence. Read those condo rules. So many people do not read them, because it is intimidating. Those binders can be 500 pages, all in with the budgets and the resale certificates and all these different things. But you're buying a piece of real estate. You're spending a lot of money and putting out debt most of the time. Do your due diligence. Read it, because that's going to affect your life for as long as you own that asset.
Do you work with investors where you're working with them and kind of advising them like, hey, if you're interested in purchasing a vacation rental, these are the condos that where you can, or that the regulations are like, how do you work around that where you have an investor, they want to get a place, but with condos they can change the regulations, so how do you kind of work around that?
Um, so, we advise them to work in the buildings that we currently operate in, where we have a good finger on the pulse of what the rules are. They're welcome to try and buy in another building, but then, it's like, okay, like, let me see the condo rules. Let's see what it takes for them to change those rules. I have a good friend. He owns in a small development in Florida, only 16 units. They are currently allowed to do it, but because there's 16 units, they're going to be able to change the rules against him, because there's just him and one other person doing short-term rentals, and so he's now putting his place on the market and selling it, because he knows that it's an uphill battle that he's not going to win. So yeah, I basically just advise people to buy in buildings where it's well established and it's allowed, and that knowing what those rules are to change it. And Belltown Court, where I have the bulk of my properties, it's that 90% and any and all people that would be affected, which would mean that my owners would have to vote against themselves in order to change it. It's not going to happen. So,
Do you also have your real estate license? Do you also do the transaction?
I recently tested because I actually setting up a new endeavor in Kauai. So I actually have gotten my license, or in the process of hanging my license over in Kauai.
So in Hawaii?
Yeah, but specifically the island of Kauai.
Of Kauai. Wow. Now that's you love the regulations, don't you? You love the people that really want to bite down. Hawaii and Seattle, San Francisco, those are all kind of markets that I think are like really highly regulated. What made you, or what's kind of your thought process with going into an overseas island?
Well, so I'm here in Seattle now, working on the business, getting things kind of reorganized during the Corona times. But I actually moved there over a year ago with my family. So Kauai is home now. So Seattle's been my home for most of my life, but now it's Kauai. So yeah, so I plan on just bringing everything that I've learned. I've worked with a company over in Kauai for 3 years, helped them grow their inventory. So I'm very familiar with the market over there and what it's going to be like. The part that's going to be the most interesting is how flight seat capacity comes back to the islands and how long that takes. And because Kauai specifically as an island, we were at all-time highs for monthly seat capacity before the coronavirus. So it'll be interesting to watch that flight data and see how soon people start coming back and how many flights get added to the schedule so we can price properties accordingly.
Is it the same in Hawaii where different islands or different what cities have and counties have different regulations as well?
Yeah. So yeah, each island is basically its own county, is the way it works. And so yes, each island kind of has its own way of handling short-term rentals. Most of them have gone about it in similar fashions. The kind of the unique part about Kauai is that Kauai in about, I think it was 2008, made what was called VDAs, or vacation destination areas. So they're the areas where hotels and vacation rentals can be. The vast majority of the island, like literally by landmass, probably 99% of the landmass of Kauai, you cannot have a short-term rental on. When they put that law into place, they gave any existing operators the option to get a license, an operator license. And so as long as you kept that up and paid your taxes on it, never paid a day late, you were able to keep doing rentals. So the kind of the drama that's been going on recently in Hawaii has been both the island of Hawaii and Oahu had similar laws in place, but they weren't really enforcing it. And so now they are trying to go back and actually enforcing these laws and saying, you know what, you're outside these destination areas, you can't have a short-term rental here. And that's where the drama comes up, because here people have been doing it for years and gotten used to the money. Then they may even been paying their taxes, paying all the tourism taxes and all of that. And the cities and the county's been getting the benefit of all those taxes, but now they're saying no. So yeah, so Kauai in some ways is pretty drama free when it comes to the short term rental stuff, because they dealt with it a long time ago and put some rules into place and enforced it. Um, so in that, I think it's a pretty nice place to operate in. In some ways, that's the beauty of it, is that the rules are well established. We know what the rules of the game are. It's in some ways it's scarier to move into a market where it was the Wild West, like Seattle was the Wild West. It could have gone either way. Thankfully, it didn't. It didn't, because it would have put me out of business. If the original rules would have got that Airbnb proposed got in place, I wouldn't have my business here anymore. So
So so now you've been able to build this business and you're actually living away from Seattle. What was that transition like from being the person doing the key check in, being the person that was always there, to now being hundreds of miles away?
well, I built my team up so that I wasn't the person doing check-ins very often. I mean, I would be a fail-safe um, option, and I would do that, and I'd often volunteer to work holidays so other people didn't, and things of that nature. But in general, I that wasn't the role of myself in the company. I was setting rates. I was reaching out to new owners. I was managing my team. That was the role within the company, and so that I could do from pretty much anywhere. So I got my business to a point where I was able to be more hands off, and so that's when we moved.
And with your investors, are you also the one that's setting up like the properties and like furnishing them, or are these people that it's just like, hey, I'm gonna design it, furnish it, and then you just manage it?
Yeah, we have a pretty strong design protocol that we've done before before the virus hit, I had a full-time interior designer on staff that was in charge of setting up properties and working with owners on that. We have very strict kind of design aesthetic that we work with. Um, and to be it'll be interesting to see how I work it. I imagine I'll just hire out the design, but still keep that same process in place going forward, so that we keep up the design aesthetic, because we know how much that affects things. Because early on, I was a little bit more loose with the program, and that I let people design, like, here's our list of things, here's our list of absolute requirements, you do your own thing. Well, I've gained data through the years of units in the same building with the exact same floor plan, and end up with $15,000-$20,000 difference in revenue, and same company managing it, potentially the same rates, but each unit I do rate differently, based off of demand. And to have $10,000 to $15,000 difference in income, that's basically just chalked up to the design and how appealing it is to the market. So when I'm talking that much money on the table, that means potentially $5,000 in commissions for myself or my company. Difference between a well-designed unit and a not so well-designed unit, we're going to make sure they're designed well.
When you're doing that process, are you charging like fees or like setup fees? Are you doing like the build outs of the properties? Like how do you onboard an investor client that's just like, hey, Darik, I want to purchase a property in Seattle that is going to be able to cash flow, but I don't want to do any of the work myself. Like how do you go through that process?
Yeah, I mean, we work out an arrangement on kind of case by case basis with that. So I've offered at times, if you sign a multiple year contract, I give you the design hours as a bonus, basically. So I've done that before. I've had them just pay us. It just really depends on the situation of what someone wants. I mean, sometimes when I'm shutting down properties because of arbitrage and stuff like that, I might be sitting on furniture and work out a great deal on some nicely used furniture from one of our other properties. So every situation is a little different.
It's interesting that you're, a lot of times when I talk to a lot of, seasoned vacation rental hosts, they stay away from anything that has to do with like, maybe owning or, master leasing, but you're very diverse with how you invest. Is there a reason? Are you just not worried about master leasing? A lot of people in the hosting community, even, they look at master leasing and they say, oh, it's a scam, or oh, it's not a sustainable model. What's your opinion?
Um, so I mean, I don't do, to be clear, I don't do any leasing now because of the regulation side of things, other than with one-on-one with individual owners. And when I'm doing that, it's got to be a win-win for everybody, and that's why I do it that way. Some owners don't want the seasonal cash flow variations between winter and summer. They want that consistent check. Okay, you want the consistent check, that's fine. This is what I can offer you for a consistent monthly check. Um, so right now, I think it depends on the market you're in. I mean, there's parts of the country that are having their best years ever. And so if I had an opportunity to long-term rent it and do the arbitrage model with the property in one of those markets, great. Yeah, in urban markets right now, or vast majority of them are taking a hit right now. So it may not be the best time, but maybe it is. I'm currently reaching out to some buildings that used to have some of these master lease people in them and trying to find a win-win scenario. Because if they're not making any money on those properties right now, maybe there's a model, and maybe it's a combination of a certain amount guaranteed rent and then part of it is as a revenue share or something in order to make everybody some money right now.
What would you do differently if you had to start from scratch?
Um, do differently if I had to start from scratch. I mean, the biggest thing that I've learned is setting up scalable systems from day one. Like I actually just shut down, I guess, in one way, the condo that I started with. So the very condo that I bought, I I ended up selling it actually a couple years ago because I had a feeling that recession was coming, and I timed it well. I hit the top of the market. We got top dollar for the property, and that person stayed on as a management client. So then I've managed it for the last couple of years. And then because of the virus, they actually have a family member moving into the property. So I actually said goodbye to that property that I've been managing for 13 years a couple days ago. And in that property, I took a picture and sent it to my wife about it. And the plates that we bought, because those plates we bought on a Black Friday sale. So we weren't able to get any more of those, but they're still in the property. We bought enough of them. We bought a 12 pack of those plates. So we actually still have those original plates. Well, now in my business, I don't do anything like that where I'm buying something that I'm not going to be able to replace. I actually buy stuff from a restaurant supplier and get them in case lots so that if one plate breaks in one property, I can replace it. And I know I don't have to try and find it. So every single piece of glassware, forks, knives, spoons, all of that stuff is standardized. So that's what I would do, I guess, differently. And what I'll do differently, the company that I use for my restaurant supply has a location on Kauai. So when I go out there and set things up, I'm gonna use the same plates and glassware and everything that I do in Seattle, most likely there. And it'll be all standardized, so that make it easy.
Where do you see short-term rentals? I mean, you've been in the game for quite a while now, and you've seen the ebbs and flows. You've seen the changes. Where do you know where do you see short-term rentals when you first started to where do you see them now, and where do you see them going forward in the future?
There's definitely been a huge professionalization. I've always been on the leading edge of the professionalization side of things, like with our interior design, professional photos, doing everything as top notch as we can, down to like the sleeper sofas we use are $3,000 sleeper sofas. They're really expensive, but they're actually really comfortable and they're built like tanks and they last 12 years. So doing things right the first time is something that I've always done, but I see a lot more people starting to do that way. Even I'm friend. I'm friends with one of the founders of Stay Alfred's, for example, and watching them grow up has been interesting because I remember when they first started, they didn't care about design, they didn't care about photos, they didn't really even, to be honest, they didn't care that much about their customers and their reviews. Eventually they figured out that, oh yeah, this all matters. And I started noticing their design looks a lot like some of our properties now. It's like, oh, they've grown up. So that professionalization of kind of giving almost a hotel-like experience to short-term rentals is definitely going to be in the future. And I also think that now in some ways that like this is the beginning of the next wave of short-term rentals is kind of my opinion in that vacation rentals, from data that I've seen, they've rebounded in almost every market faster and stronger than hotels have because people are able to cook in the home. There isn't a lobby that they have to meet thousands of other people and bump into them as far as risk of the coronavirus or anything else. So I think that short-term rentals, alternative accommodations, they're going to actually rebound faster, stronger, harder, and we're going to see more and more. Marriott started homes and villas not that long ago, and that started gaining some momentum. And I see more of those types of efforts from the hotel sector coming as well. Maybe purpose built vacation rentals and apartments and things like that.
You said that you saw, Stay Alfred really grow, and Stay Alfred, for those of you that for those of you that are listening, they did the master lease model, so they would rent out apartments at scale. Where do you see that maybe they dropped the ball, or that how because a lot of people that listen to the show, they're interested, they're diverse, they're very entrepreneurial savvy, short-term rental hosts that are interested in master leasing, managing. Where do you see that model, where we have been hearing a lot of these master lease companies taking big hits? Do you have any perspective or thoughts on the reasons?
Yeah, I mean their model their model was sustainable in good times, but it's not like Stay Alfred's actually filed for Chapter 7 a couple months ago, so they're no longer a company, I believe, or they're going through that process. So, um, and they don't really have a lot of assets. Like the technology, the tech stack is probably their most valuable asset. Maybe their customer list. Those are the two things that have the most value, because they did kind of self-develop some tech on their side. So I mean that's the part that's unsustainable, is that they don't really have much for assets. Where I think it'll go is they'll become more partners in the development of properties, and so they're able to get the upside of the valuation of the property, and or more management style contracts. Like hotel managers are very common, so you might have the flag of Hilton, but you might have a local operator being the actual manager of the property, getting a commission on room sales and general sales of the property. So that's not an unusual thing. And I imagine there's going to be some sort of hybrid model of that with apartment buildings in the future.
Okay. And what question would you ask another professional host? Maybe someone that's in the similar position than you, or maybe someone that's at that next stage where you'd like to go. What questions would you have?
Hmm. I mean, the part that I'm not super knowledgeable about, that I'm trying and I'm working on getting educated, is the hotel licensing in highly regulated areas. So trying to figure out the ins and outs of getting a hotel license, because that's how some of these companies like Lyric and Sonder and Stay Alfred's, in some regulated markets, they would basically get a hotel license for 4 floors of an apartment building, and that's how they were able to operate. So I'm not super knowledgeable about that aspect of the business, and always looking to gain more there.
Awesome, awesome. Well, what's the best way that anybody can reach out to you, Eric? If they, Derek, if they have any other questions or they want to be able to find out more about you and your company?
So Seattle Oasis Vacations.com is our website. I also run a Facebook group to try and help share some knowledge, vacation rental life, on Facebook. So that's where people that are new to the industry and they want to pick my brain. That's where I give my free advice, is through that. And so yeah, so those are some of the best places.
Awesome. Of course, we'll include everything in the show notes of this episode. Thank you so much, Derek, for taking the time and sharing your journey. You've got a very wide experience, and do you see yourself doing this for a lifelong, or do you want to put the business and start paddleboarding in Kauai and not have to deal with the business much longer?
No, I mean I'm gonna set up a stand up a company in Kauai. I don't know quite the details of what that's going to look like. I mean, I already did once, um, so now I'll do it again with some of the lessons that I learned from that and what I've learned from Seattle. And I don't know if I'll venture off to another market after Kauai or not, but the whole reason, my why behind what I do. I was born and raised in Seattle. I love Seattle. I love sharing it with people. Um, and the same is true for Kauai. Kauai is one of the most magical places on earth. So I'm gonna do the same thing there, and hope to bring healthy tourism to Kauai. That's kind of the mission of my company. There is having it be a well balanced relationship between tourism and helping support local economy, because there's a lot of people that feel like tourism takes away from Kauai, and I want to add value to Kauai. So looking for those partnerships where I'm sending my guests to the local spots, that want that type of business, and help support our local economy.
Awesome. Well, thank you again so much, Derek, for taking the time. And until next time, Host Nation, keep on hosting. Hope you hosts benefited from the show. If you found value, please go on over to iTunes, leave us a review, and let us know what you enjoy about the show. If you'd like to talk to hosts that have been featured in these episodes as well as the community, go on over to our Facebook group, The Host Nation.